Good afternoon and welcome to HYCM's online trading workshop with myself, Giles Cochran, Chief Currency Analyst here at HYCM. Now we have got a really quite an eventful session because we're covering two very big trade deals at the moment with Brexit and the US-China trade deal, and lots of headlines going back and forward on those two big deals. So we'll be digging into those deals, and I'm going to be flagging up some of the key issues to watch out for them, so we can try and filter out some of the noise. Just before we get going, just going to say hello to folks as you're coming in. Let's see who we got. Hi, Sammy. Good to see you. Van, lovely. Selva, Tan, Toby, Yue. Good to have you on the session, guys. That's great. Just gonna put in a handout. Just forgot to do the handout for the session. I'll just put that in. Bear with me. Oh, that's all done. That's great. Just quickly making it clear with this disclaimer at the front of the webinar, just to make it clear, the whole point of this disclaimer is to say that this is not a signal service. So the idea of the workshop is that you look over my shoulder, you see the kind of thinking processes that I'm getting involved in, how I make my decisions, and then you learn from a professional trader how to make your own trading decisions. So what it isn't a trading signal service where I say buy this pair, sell that currency pair, and do this and do that. Instead, the whole idea is about education to show you these are the tools you need to make in order to make your own decisions. So that's the situation with the workshop if you're just joining us for the first time. And we will be having opportunity during the session to ask, show me your trade ideas. So if you've got any trade ideas, you can just pop them in the question and answers panel, and we'll look at them towards the end of the session. Okay, session ahead. Special topic we're looking at today. I'd like to have a special topic each week, and this is just recapping where we are after the US-China trade talks from last week. There was, some optimism that a so-called phase one trade deal had been arranged between China and the US. So we're going to be looking at some of the detail, or rather some of the lack of the detail, and we'll be seeing what actually is in that trade talk, and as well as some of the recent comment there's been yesterday and today. Handout for the session is, as per usual, underneath the handout section. If you go to your GoToWebinar control panel, if you're joining us for the first time, there's a tab which says handouts and a little grey triangle. Click on the little grey triangle and the workshop guide will appear. And if you click on that, it will be here. You can download it. And I've organized this handout so you can print it out for yourself. And it covers the 5, very broad but important principles of trading. So it's, looking back, forward at the charts, at your risk, and looking at the outcome of your trade. So that's one of the key handouts, and that should be printed out and by your desk if you haven't already sort of internalized that. Internalize that for yourself. Hi, Chibivan, good to have you on board. That's great. If you've got any suggestions for special topics you would like covered, just email me here. I'm open to suggestions. And if there's something in particular, either you want to, a question you've got or something you want covering on, just email me there to giles.cocking@hycm.com, and I can pick up your suggestions and we can look at them in the future. So the first issue is, where are we now after the US-China trade talks from last week? Yeah, okay. Yeah, Chibivan, I don't think you can see volume on MetaTrader 4. I don't think you can. So I could be wrong, but I'm not. I don't think there is a volume indicator because it isn't centralized, the FX markets, unlike other markets which have a centralization. The FX markets are decentralized, so I'm not aware of a indicator of volume for the FX market. So Trib, you'll have to check that out. I mean, I'll just quickly Google that for yourself, Trib, and I'm sure you'll get the answer. But that's off the top of my head. I think that's the problem with a volume indicator with the currencies. Okay, so where are we with the US-China trade talk? Now, with the US-China trade talk, the phase 1 deal is due to be signed on November the 16th. So the deal hasn't been signed yet. It's due to be signed in Chile at the Asia Pacific Economic Cooperation Group, okay? So let's just see some of the details. The market at the end of last week was rallying on positive risk sentiment. And of course that makes sense, doesn't it? Because, the whole idea US and China getting a deal done is important for the whole world economy, with 25% of the world's GDP coming from the US, 15% of the world's GDP coming from China. The concern the market has had is that a US and China trade war is going to drag down global growth. So it wasn't seen as an isolated problem between two countries. It was essentially seen as a global growth problem. So the market has rallied on the optimism that, great, the two largest economies in the whole world are beginning to show positive signs of working together. So that's been very positive for risk. So that's why we see the strong rally in equities at the end of last week. Now, we're now looking at the detail, okay? And that's often the way the market works. You have this euphoria, and then, well, let's look at the detail. And the detail is that there is a surprising lack of detail, okay? So the October 11th deal at the moment so far has largely been sentiment. So it's largely, it's more than a gesture, but it's on that kind of, on that level. They're saying we want to have a deal. They've discussed a few issues, but there's not a lot of details that are really nailed down, okay? And that's why we saw a comment from China yesterday saying that China are keen for more discussion ahead of signing the deal. And that was the first indication that was saying, yeah, okay, you're great, but we need to discuss and get some more detail into the nuts and bolts of the phase 1 deal. So that was a tempering of risk sentiment yesterday. Okay, it was like a little bit of a little bit uncertain with that. And I was looking at shorting pound Australian dollar yesterday, and when this mood came out from China, they were wanting more discussion. That for me was just saying, oh, okay, they're not 100% happy with the way things are going with the phase 1 deal at the moment. They want, they want some more discussions. That's what was slightly negative for risk, and it came in yesterday's European session. I just put up a post looking for pound Australian dollar sellers, and then I did a quick update saying that this is no longer an appropriate outlook for the day, and it was because of this bit of information from China that changed my mind. Now, the other thing to notice is, the tariffs haven't been wound back. So all that's happened is the US have said they won't lift tariffs to 30% from 25% on about $250 billion in Chinese goods. So there was a big tariff that was meant to go into effect yesterday. They're just saying, look, we're not going to lift it up to 30%. So that's the only step back we've had really from the tariffs. So just to be aware of that. Now, China is meant to be agreeing to buy between $40 and $50 billion worth of US farm products. Now, that seems really quite optimistic. Okay, this is one of the concerns. I was reading an article yesterday, and it was an article on Bloomberg, and they were making the point that, actually that's going to be very hard for China to hit those level of US agricultural products. And they just made the point, because a lot of soybeans are imported, by China from the US. And so in 2017 to 2018, you see, So in fact, 50% of all farm products in China were soybeans. Okay, so 2.7 million tons were imported in 2017 to 2018, and that's dropped to 13 million tons in 2018-19. So okay, sorry, 27 million tons, and that dropped to 30. So it nearly halved with the US-China trade war. That's basically what this is saying. So before the US-China trade war, 27 million tons, that's halved. So if China returns to buying 28 million tons, that will be worth just under $10 billion. So some of the maths is starting to not add up, because if China's saying they're going to buy $50 billion, if they return to what they were buying before in terms of soybeans, that's only $10 billion, and that leaves $40 billion worth of extra imports. So that's like going to be lots of nuts and hogs and massive levels. So the US Treasury Department saying China are going to work towards it. So that's an acknowledgement. And China has also said, look, we need some of the tariffs removed if we're going to hit this target. So already from the get-go, that question marks are being raised. Can China actually buy that amount of US farm products? It seems a little bit optimistic at the moment. And also there was no mention of energy in the deal. So I'm going to show you a Reuters chart in a minute, and you're going to see the drop in energy exports to China after the trade dispute broke out. So if there's going to be a phase 2 of the deal, expect energy to be mentioned. So you can see here, okay, the trade dispute really broke out, end of 2018. We suddenly saw this huge drop in imports of coal, LNG, and crude oil from the US. And you can see that they were quite a good market for the US to import to China. And obviously they have all moved down from those high peaks. So expect and look out for any news on energy to do with Chinese imports of US energy. So that's just another thing. More is wanting you to be aware. So look out, this is potentially market moving if we see something positive on energy. The market will be sensitive to this. And also sensitive to these agricultural products. So just be aware that those $50 billion of US farm agricultural products does seem rather optimistic. Doesn't mean they can't happen. Obviously, they can't happen immediately. Doesn't mean they won't happen, but it's just helpful to be aware of that context. So, you take it as a whole. What have you got? It's positive ground. It's good news, and it's been good news for risk, undoubtedly. But this is just to give it some context. It's not an amazing deal that's going to solve all the issues. It means that although this is better than previous truces or warm sentiments that people have been making, particularly between the US and China, we're not there yet. That's really what I'm wanting to highlight here. So be aware that the trade, phase 1 deal is still tentative. Now, the signing is November the 16th. So that gives us a good run up into that meeting, and the market will obviously have ebbs and flows on the mood, and watch out for more details coming through, and that will be affecting risk sentiment going up into it. So that's just a little update on the US-China trade talks. It's it's easy to get carried away with the kind of optimism that a deal's been signed, and it's helpful, isn't it, every now and then just think, well, okay, well, what actually has been signed? So turn to our handout, and the way we use our handout is we start by looking back, and what we're trying to assess by looking back is what is the recent market mood. Okay, what's been going on the last 2 sessions of market activity? We identify that key market sentiment, and we try to summarize that sentiment in a sentence or 2. Okay, that's what we're trying to do. What is moving the market at the moment? And then once we've understood what's moving the market at the moment, what we then want to do is we want to work out which currencies are going to be impacted by the present sentiment. Okay, which currencies is that going to impact? And we're looking for a strong and a weak currency pair to trade. That's what you're trying to decide for yourselves, which is the strong currency pair, which is the weak currency pair, because that pair is most likely to go in the direction that you want it to go in, because hopefully you've selected a pair that has two different factors moving it along, okay? And you want those factors to be opposite to one another. So if this is your first time today, don't worry, we'll explain this as we go through. So I come to my desk just at the end of the Asian session, just as Europe is kicking off, about sort of 6:30 British summer time, which is about 5:30 GMT time. And in the Asian session, we had the Asian equity markets trading mixed. Okay, I'll explain why we look at the equity markets in a minute, but you want to look at what's been going on in equity markets. Now, in the equity markets, the American equity market tends to set the tone for the next market. So what happens in the US tends to move into the Asian session, okay? Now, in the Asian session this morning, we had the Hang Seng unchanged, was flat. We had the Shanghai Composite down minus 0.5%. That's not going to be 200%. Apologies for that. The ASX was up 0.2%, I think, if my memory serves me correctly. And the Nikkei was up plus 1.9%. Now, when we're looking at equity markets, any time an equity market is up 1% or down 1%, you want to take notice. Okay, that's a significant move. That's a good general rule of thumb. The Nikkei was up 1.9%, but remember, that was outperforming because it was closed yesterday. So the Nikkei was sort of catching up on some of the optimism from overnight Monday. Now, overnight Monday was still sort of riding on the coattails of Friday's optimism with the US-China deal. So that was still being, you know, in the market's blood, as it were, that optimism. So that's why I was expecting to see some Australian dollar strength first thing on Monday morning. So now we have concerns about the US-China trade talks. And you see, in those concerns, we're just weighing on the equity market. So the Hang Seng unchanged, Shanghai Composite was down. So we're starting to see some pullbacks from the earlier gains because the market's concerned. You know, what's happening with US-China trade talks? Some of the issues I looked at, well, what are the details? What are the deals? Will China be able to actually purchase $50 billion worth of US agricultural products? What's China thinking about these deals? You know, is the deal going to get signed? And China has made a number of noises saying, you know, the main one was we want more discussions, we want more talks. So yes, it's still in a warm situation, but there's concerns about the US-China trade talks. That's what weighed on the equity markets. You see, and that tells us that there's some question marks. So why do FX traders care about the equity markets? Because equity markets give us a good indication on risk appetite, okay? So when you see a falling equity market, that's telling you that risk is off, okay? When you see a rising equity market, that's telling you that risk is on. That's what you tend to see. So you tend to get, you know, in a risk-off market, you'll get falling equities. And that's because equity investors are very sensitive to risk. Okay, as soon as they can see risk, investors tend to rotate out of equities and into bonds. Now you see, a bond is basically you're giving someone a loan, and the attraction of a bond for an investor is that the investor will receive a fixed sum. So imagine if you have a large fund to manage, and all of a sudden you can see that there's a lot of risk in the marketplace. You might think, well, I don't want to put my money in equities because equities might fall by 5, 10, 12%. There might be a big sell-off in the equity market, and then that's a huge chunk of my fund that's gone. Well, actually, instead, I could put a big chunk of my investment into a bond, and I could buy a high-grade bond, so something like a US Treasury or a UK gilt, and then I would have a fixed return of interest, and I would get my capital back as well. So I know I'm going to be making, 1, 2, 3% on my capital investment. So that's why equity markets show us risk appetite. They show us that movement from equities into bonds, which is why you tend to see this correlation. So when you've got a lower volatility index, you've got stocks tend to rally, commodities tend to rise, commodities that are involved in construction and growth. So things like oil, copper, iron ore, those are key commodities that rise when optimism is high, and you get things like bond prices will fall. Okay, so when bond prices are fall, it's because investors are taking money out of their bonds and putting them into equities. Okay, which is where you get stocks rallying, and that's where you get rising yields. Okay, the yields rise as a way of attracting, obviously, investors and investment. That's when it's risk on in FX trades. Okay. Now, when it's risk off, you've got the higher volatility index, you've got stocks falling. That's when you've got commodities falling, because folks are concerned about growth and global growth and things that are involved in growth. Copper, iron ore, oil tend to fall in price. You get bond prices rising as money rotates out of stocks into bond prices, and you get bond yields falling. That's when you've got that risk off sentiment. That's like a key relationship to grasp, and the reason we want to grasp it, because often this will give us a bias for currencies to trade. Okay, so when we're in a risk on market, many of you guys will know. In fact, let me do a little test. Okay, so in a risk on market, guys, what are we likely to see? In which currencies are we likely to see to appreciate in or depreciate in a risk on market? Which kind of reaction will we expect from various currencies? Type it in the question panel. Let's just see how you guys are doing. I know some of you guys have been coming to these seminars for a while, so you should have this down. Let's see. Just see if you can. Yeah, so if it's risk on, that's right, Tribuvan. You're expecting to see weak yen, weak Swiss franc. Now, the US dollar can be a little bit more complicated to trade depending on what's going on, but certainly you're going to see pound yen and Swiss francs selling off in a risk on market. And then you get the higher yielding currencies. Yeah, Aaron, that's right, like Australian dollar, New Zealand dollar, and Canadian dollar appreciating. Okay, and obviously if you've got oil appreciating as well, then that's an extra boost under CAD. These are called, the commodity currencies. Okay, so again, going back here, if you've got commodities rising, that is underpinning the commodity currencies as well. Australian dollar, obviously, copper, iron ore, CAD, oil. Okay, New Zealand dollar, has gold and a various other basket of commodities which it exports. So that's why we get these high yielding currencies, commodity currencies rising. So once we've established a risk on sentiment, then we already have a good selection of strong and weak currencies. Okay. Now, Hashik, you get strong yen and strong Swiss franc when it's risk off. Okay. So when it's risk on, you get Japanese yen and Swiss franc weakness. Okay. So are weak. So in a risk on market, you get yen and Swiss franc weak. Okay, Hashik? The opposite is true in a risk off market. In a risk off market, you get yen and Swiss franc strong, and sometimes the US dollar. And conversely, you get the Australian dollar, New Zealand dollar, and Canadian dollar depreciate. Okay, so really helpful. That's why FX traders are concerned about what's happening in equity markets, because it gives currency traders a heads up on a number of different currencies. Okay. So in the Asian session coming to this morning, as I was looking back, doing what doing what I ought to do, and what I do automatically, I think what's been going on overnight, and the thing that was going on, skepticism about US-China trade deal markets, that is what had weighed on equity markets. So this mood was still in the market, okay, still there. So that means if there's concerns, then I'm potentially looking at yen and Swiss franc strength, and Australian dollar, New Zealand dollar, Canadian dollar weakness, okay? Now, I also looked at the RBA minutes, and I'm going to give you a link here, which gives you the full text of the minutes. Okay, so I've sent that to all of you guys. Now, the RBA minutes, you can read the minutes there. And actually, if you want, it's very helpful to read the minutes, because central banks will often tell you and give you a good summary of where global markets are at. So it can be very helpful to read some of the central bank minutes. You get a good indication of different issues that are affecting not only the Australian central bank, but other central banks around the world. So it can be a really helpful discipline to do. So I've given you those minutes there if you want to take a look at that at some stage. Now, the RBA minutes themselves, there's a number of different points which I've detailed here, but what was key here was that it's reasonable to expect an extended period of low rates being required. Obviously, we've got China-US trade disputes are a significant downside risk to the global outlook. So the RBA have said, they cut interest rates by 25 basis points at their last rate meeting, and they're sort of saying, look, you can expect a period of low rates going forward. So they are prepared to cut again. So they also mentioned their focus on the labour market. So you put that all together, then the market looked at these minutes, and it showed that the board was ready to ease further, and future prices now imply a 76% probability of a 25 basis point rate cut in December. So in other words, the chances of a rate cut were now seen as more likely after the RBA minutes. Now, obviously, the RBA minutes are about a previous meeting. However, traders and investors look for minutes of a previous meeting to try to understand the thinking process that the board is using, because by looking at the thinking process the board is using, you can then infer back through the events that have happened where they probably are now. And the market has done that, giving it a probability, and they're seeing that a rate cut is now the most likely move by the RBA in December. Okay, so looking at that, then you have to make a decision. Okay, in the morning you're thinking, well, which currency pair looks like it's heading in the opposite direction to one another? Where's the strong and where is the weak currency? And so the weak currency was the Australian dollar. Okay, and the Australian dollar was weak for two reasons. One, the RBA minutes, they showed that the board is ready to ease further, and chances of a rate cut increased. Okay, so we clearly know that once the chances of a rate cut have increased, we know that that's weak news for the Australian. So I'll just check you. Oh, okay, hang on, guys, just check you there. Okay, I think you're with me, guys. Now, what currency will be strong? We've got the Japanese yen. Why did I pick the yen as a strong currency? Because of this issue here. skepticism about US-China trade deal, we saw that the Asian equity markets were affected. So we could see that it's an Australian dollar, Japanese yen sell. Okay, I'm expecting sellers on this pair. So that's, once I've done that, I then want to look at the technicals. So then we're just looking at the daily chart. This is Australian dollar, Japanese yen pair. You can see, the prices sort of pulled up to these technicals, 100, 100. We had a rejection of the 100 exponential moving average. That was the optimism Thursday, Friday, and then the deal's being digested. We covered that. Now going down to go down to a 15-minute chart. I like to use the 15-minute chart, and then you can see, so price was around here this morning, and I was expecting sellers back into this region, that region, and stops above the high here. Okay, that's what I was expecting for today. Expecting those kinds of moves, and we got the sellers. Now, as long as that mood remains the same, then I'm still expecting Australian dollar, Japanese yen sellers. Now, there is a better currency pair for the afternoon session, and we'll cover that. But any return back up into this region, anything into that region here, I would expect sellers. So about 73.28, I'll expect sellers back into that 200, 100 exponential moving average. I'll expect fresh sellers there. And then you think, where would traders be taking profit? Intraday traders will be taking profit. Then, you wouldn't be wanting, without a fresh catalyst, you wouldn't be wanting to be going much more further down than this, because this is recent lows. Okay, so you've got those recent lows here, big psychological number, 73. So you'd expect profit takers at these levels. This is, of course, for intraday trading. Okay, so this is an intraday trade, and you can see that, for me, the trade was from up here down to this region here, and maybe look at closing it before lunchtime. That's the sort of thing that intraday traders will be looking for. So that is the situation with the morning session. Now, we then do the same process again for the European session before the US session starts. So then we went to the European session, and we got lots of movement on the pound. Okay, and there was another deal of Brexit positivity boosted by EU's chief Brexit negotiator, Michel Barnier. He was sort of saying in the morning he's hopeful that a deal can be struck in time for Thursday, Friday's EU summit. So he was very optimistic. And if I just go to the pound currency pair, we'll look at just the pound US dollar. It's nice and simple for us. You can see that we got early this morning, we got this sudden boost. Okay, got a boost of optimism here, and that was on Michel Barnier speaking early this morning. Okay, and that is a mood that's in the market for the pound. It's just gently being bid, and it's being bid on optimism that a deal can, in fact, be struck. And I'll tell you the further news. This is interesting with the pound, because UK PM Johnson spokesperson was also saying the European session confirms that a deal must be reached by the end of Tuesday, and the PM is aware of time constraints but wants to make progress ASAP. Now, there's a lot of headlines coming out for the pound at the moment, as you can imagine, but where we currently are is that it seems to be that a deal needs to be struck tonight or today. It seems to be the last opportunity. Now, there was a report out just as I got on to the webinar, which was sort of saying that that Brussels, that the EU will call another Brexit summit on the 29th or 29th of October if negotiators fail to meet tonight's deadline of midnight to replace the Irish backstop. Okay, so just to be aware that there is a slight option of another time before October the 31st. Officially, that's when Britain has to leave the EU. And what I'm trying to say is that it's all coming to a crunch potentially today and tonight. This is a very important day. So what's going to happen with the pound? Well, if a deal is agreed, then that will be pound positive. Okay. If an extension is agreed, that will be pound positive. Now, if it's no deal agreed, that will be pound negative. So if, Michel Barnier turns around and says, there's no chance of us getting this deal done, we're back to square one or something like that, then we're going to see the pound selling off. Okay. If we see a deal agreed, yeah, we've done it, then expect that to be pound positive. So they're the three main outcomes that we're expecting from today. Now, there are nuances to this. So you might get no deal agreed, but an extension to talk about it more. Okay, and that's a little bit harder to call at this stage. Okay, obviously an extension is generally positive, so that scenario I'd expect to be positive. But you just have to be aware that there could be some nuances to what happens, and that's going to alter this outlook. Okay, this is the plain, deal agreed, expecting that to be pound positive. Extension, expecting that to be pound positive. No deal, expecting that to be pound negative. If something else comes out which is a variation on these themes, you just need to be aware of that. You just might need to think about the implications of what that actually is. Now, I'm going to give you guys a website which you can use that will keep up to date with the news. Now, this is a web organization that I work for, and I know that their resources are from Reuters and Bloomberg's terminals, which is, Bloomberg terminal is arguably the best trading terminal you can get, and the news is the quickest that you can get. Okay, so I know that these guys are using that. So if you follow along, obviously you've got here's the website coming along, forexlive.com. Send to all. That website will give you up-to-date breaking news, and it'll be a couple of minutes out. Okay, just as long as it takes someone to type up the headline and to publish it on the web. So just to be aware of that, and that website will help keep you informed. Now, there's a lot that can change in these kind of markets. Obviously, it's only one tweet, isn't it, or one headline that's moving these markets around. So if you're trading intraday, you've got to be aware of that. You just got to be aware of, okay, I'm trading this sentiment. The sentiment is like this now, but it could change. And particularly at the moment, however, I'm expecting pound optimism into this evening because, all the mood is good. So I'm expecting that into the evening, but obviously that can change. And that's, that is trading, but particularly the sentiment is susceptible to change at the moment, particularly so. So just to be aware of that, if you're buying the pound, be aware of how sensitive the market is at the moment to these kind of headlines. Yeah, then we had this headline in the European session, which was interesting because I'd just written what I'd written earlier out. It was from a Bloomberg article I've been reading. And then lo and behold, we had this headline in the European session: China said to struggle to purchase $50 billion of US related farm goods annually unless it removes retaliatory tariffs on American products, according to sources. So, more kind of slightly negative headlines. You're trying to work out the detail. It's kind of like they're trying to work it out after the event. Now, it's good news that they want to purchase that amount of farm goods, but as we've seen, is that how realistic is that? You know, that sounds fantastic, but is it deliverable? Is it achievable? Is it realistic? The jury is still out, as they say, on that, and then trying to work out what they can and what they can't do. So it sort of shows a sense of flux. It shows that China still wants to talk. And one other thing to look out for the headlines is when you're looking at headlines, look who the source is. So if President Xi says something, it's obviously going to have much more impact than if, like, reporter says or a newspaper says. So always look at the source. If President Trump says something, it's going to have more impact than, say, the editor of New York, or the editor of a US paper. So obviously you got to check your sources. Who's saying it? The more kind of relevant the person to the news, the bigger reaction. So if it's someone like Trump saying something, okay, that's important. President Xi saying something, great, that's important. President Xi's deputy, etc., etc. You get the point. So just check those sources. So sentiment for the US session. Again, expecting pound strength on Brexit optimism and Australian dollar weakness on trade pessimism. Okay, so this was the kind of key that I'm expecting for the coming session. And once we've got that currency pair, so this is what I'm expecting for the rest of the section. But obviously, as I've said, this can change on the trading headlines. Now, as we're looking at the market, we're looking at where's key resistance. We've got some key resistance overhead just before the 1.8800 handle. The big round numbers, the 00 numbers, 8600, 504, they are significant. They tend to have more impact than any other digit, just because of the psychological number. It's just practical reasons. People, rather than thinking they're going to enter at 1.7963, well, I'll enter at 1.7 or I'll enter at 1.6. It's just easier to do it when you're typing on the screen on the computer. So that's partly, there is just a psychological reason, but it kind of acts as support and resistance. So overhead resistance, we've got that 1.8800 level. Okay, you can see in the recent range, that would be kind of the maximum of the recent range. So it'd be you'd need a strong catalyst to break out of that. So that tells us, no matter what happens, that's pretty much our target level, just below there. That would be target for traders. Now looking at so we'll look at the 15-minute chart. So we'll look at some more support and resistance. Let's see some other key levels that we have here. We've got look at level here, here, and here. That's another key level there. So that is likely to provide support. So you can see that could be a good place for a stop. And then on the 15-minute chart, yeah, you can see, look, short-term resistance levels are here. And then you've got a big round number there, 1.86. So you can see, okay, look, okay, I've got a fairly good, and that's yesterday's low. So looking at all of that, just draw a fib retracement in as well. So looking at those levels, yeah, you can see that this region up here, you expect to find buyers, and this region down here, the 61.50, so anywhere around there, expect to find buyers as well. We'll see if there's any pivot points there that are of particular interest. Yeah, one just above that 1.8600 level. That's interesting one. And then, okay, we've got another pivot point here, which says, okay, you know, in terms of where would you expect, you know, where would you expect to find a stop? You can see that, you know, a stop underneath this level would be nice and out of the way. Potentially, you could have a tighter stop here, just underneath that level there, 1.8500. You know, but obviously the safest place would be this region here, and I'd be expecting buyers on pullbacks, and then potentially you'll be looking for an upside area to be aware of is this 1.8800 level. Okay, so that's kind of what you'd be looking at on the pound Australian dollar pair. That's what I'm looking for, and looking for those kind of buyers coming in at these regions here. If we get a pullback, or even on that top little level up there. So that's a quick rundown of how, you know, I go about choosing my currency pairs on a daily basis. We looked at two today. The Australian dollar, Japanese yen is still, you know, live and an outlook that's valid for now, but this outlook looks better. But obviously, this is vulnerable to news on two lots of deals. It's vulnerable to Brexit. It's vulnerable to US-China trade news. So that's one to keep on top of. So that website, forexlive.com, would let you know of a change of sentiment. So any significant change in sentiment would, you know, invalidate that outlook. So what trades are you guys looking at the moment? I thought I'd do this feature each week to just make it a little bit more interactive. Is there any question marks you've got about currencies? Any trades you're looking at? Maybe you'd like just a little bit of a little bit of guidance. What currency pairs are you looking at, or got any trades on? Okay, euro, US dollar. Okay, let's look at the euro, US dollar. Let's just pull it up. Okay. So euro, US dollar. Now this is an interesting pair at the moment, because there isn't a whole lot going on to move it right now. We're sort of stuck between this range, 1.100 and 1.100. So 1.100 and 1.100. You know, sort of stuck in that range at the moment. Price moving to the downside. You can see the trend. The move is down. Okay, you see the trend is down, and that's reflecting, like, the data out of the Eurozone has been poor. German manufacturing has been poor. So, you know, unless you can see the euro was recovering a little bit into the end of last week, and that was on the changing risk tone. Okay, so if things suddenly look good between US and China, that will be good for emerging markets, emerging currencies, and the euro would like to get lift. Okay, so euro, US dollar, you know, the ECB, you know, there's not much news coming out of the ECB at the moment. We know the data's poor. We know that they're, you know, in negative interest rates and looking for fiscal policy to stimulate them. With the Fed, will the Fed cut interest rates at the end of this month? Still trying to wait and see. So I think, for me, the euro-US dollar has been pushed around on these US-China global headlines. There isn't anything particularly new with the euro, but one thing I would note is, like, the euro, I have, you know, just note that as a weak currency. So sometimes you might have like a clear, strong currency to trade, but you don't have a clear weak currency on the day. With something like the euro, is just like a good currency pair to short, because the kind of the sentiment against the euro is negative. So Harshit, what were you looking at, Harshit, with the euro? Were you a buyer or a seller of this pair? Let's see, seller. Yeah, okay. So the thing that makes sense for a euro US dollar seller, Harshit, is that does make sense, because the US dollar sold off last week as the market kind of sold off safe haven currencies in response to the positive US-China trade deal developments. So you just got to be careful, that if the optimism returns, you're going to see the US dollar sell off again. Okay, so what I'd say is, okay, if you're seller intraday here, makes sense now, and the area to be aware of is this 1.0950 level. Okay, you can see it's provided support here, here, and here. So, if and when we break through that level, then look at this level carefully, as you're likely to find sellers taking profit down at that level. Now, okay, Selva buying US dollar. Now, buying US dollar is making sense, as I said to Hashik, when the market is using the US dollar as a safe haven currency. Now, if things deteriorate again between US and China, then we're likely to see US dollar strength come back into the market. But remember, when trading risk currencies, my preferred risk currency to trade is the Japanese yen. So in that kind of scenario, I prefer to trade the yen long rather than the US dollar, because the US dollar can be quite tricky sometimes. It can be moved around by different things. Sometimes it's monetary policy, sometimes it's safe haven flows. So that kind of fluctuation can be hard to get your head around. What's driving the US dollar at the moment? Sometimes it's a combination of those things. So the US dollar in itself, buying it does make sense in this current environment. Okay, but the other thing you have to be aware of the US dollar is, if the deal gets kind of agreed in principle between US and China, focus could then switch back to US central bank policy, and the market is kind of expecting the US dollar to sell off because the market's expecting the Fed to cut rates at the next rate meeting on October the 31st, something like a sort of 60-70+% chance. So what you have to look out for is if the risk sentiment changes. So if all of a sudden US China really do agree a trade deal, then we're going to see the euro appreciate, and we're going to see more US dollar weakness, and the focus will shift right back on to, oh, sorry about that. Yeah. Yeah. So that's what I'd say about the US dollar at the moment. So to summarize, if the US-China trade developments go well, then you're going to see US dollar weakness. If the US-China trade deal developments go badly, we'll see US dollar strength. And you also got to remember what's happening with the Fed on October the 30th. Okay, so if the data gets really bad, then we're likely to see more US dollar weakness, because a rate cut will get priced in. If the data is good and the Fed's optimistic, then we'll see a US dollar strength. Okay, so there's you know, some days it could be monetary policy moving the dollar. Oh, some days it's safe having currency. So it's tricky on the dollar. That's my take on the US dollar at the moment. But what I'd say is, you know, when things are unclear, go with the thing that's clear. Sometimes it just opens up and it becomes clear and straightforward. Other times it's a bit murkier. But when things are murky, look for the clear ones. So, you know, obviously, negative US-China trade developments is going to be strong yen, strong Swiss franc. Simple. Okay, and the Australian dollar-Japanese yen pair is a good go-to risk pair because they're both affected by the US-China trade deal negotiations. Okay, so Australian dollar-Japanese yen is quite a good risk pair. Okay, guys. Well, then, you know, we've covered a lot today. I'm just going to give you a quick link to some paid resources. Okay, these paid resources are helpful. You can take a screenshot of these, and obviously that forexlive.com. You can use these resources just to keep on top of sentiment. And I would say, look, Rand Squawk, if you haven't used a Rand Squawk, which is a service which is a very fast news service, and often I've noticed, like the Rand Squawk service, they often are just talking out what comes from the Reuters terminal. So you guys are very quick. Okay, so they do a free trial. Okay, Rand Squawk. I'll just put the name in the box. So they do like a kind of, their entry, you know, service is something like, I don't know, $50 a month, but they do a free trial as well of their top service. So if you wanted to see what it was like, you could get like a 1 week or 2 week free trial, and that could give you an indication of whether that would be useful for you or not. But the reason I mention it now is because, well, you know, the Brexit deal may or may not get done tonight. So like we could get some big moves in the pound. Obviously having a Squawk service would help you be, you know, the first to know. So, and even if it doesn't get done tonight, it might be, you know, there might be some more breaking news. So anyway, it's probably quite a good time to have a paid Squawk service. Or if you're not convinced about having the paid service, you can get a free trial, is what I'm trying to say. Okay, so I hope that's helpful for you guys. And the other thing to look at is, don't forget we do the one-to-one coaching with HYCM. So if you deposit these amounts into your trading account, if you're doing that or are going to do that anyway, remember this offer, that you get a coaching session with myself and follow up and VIP support, depending on, you know, how much you deposit into your account, because it offsets the cost of having me with the deposit made in the account. So just to be aware of that offer, okay, that's there. It's a good one to have. And when I do the one-to-one coaching, you know, people who do them find it rewarding, and you know, it can be helpful to have time just talking, trading through with someone without, you know, just, you know, it's a two-way conversation. It's much easier. So don't forget that service. Okay, guys, thank you very much for your time. I hope that you have a good session, and I look forward to seeing you guys for the FX week ahead next week. Thanks, guys. Thank you very much. Take care. Goodbye.